Good morning, students. Good morning to all. And last day we have studied about the gains from international trade. So, what are the gains we will get when we are involving in this international trade? So, today also just we will remind about what we have studied and we will go to the next concept. On last day we have studied the gains from international trade. So, the gains from international trade may be categorized under the four heads. So first one is efficient productions. The international trade enables each participatory country to specialize in the production of goods, in which it has absolute or comparative advantages will be made. So when we are involving in this international trade, so all the countries will get the efficient in their productions, and the better utilization of resources will be arised. Better utilization of resource means so every nations also want to improving their size of export. So if they want to exporting more product, the nations must be utilize the resource as the optimum way. Next, concentration in the production of goods in which it has a comparative advantages. So if which nations can have the power to produce the commodities, in that line only it will be give the more concentrations. Next, saving in time. So when they are exporting or when they are importing any of the low demanded commodities or the comparative cost advantages, so it will save many times. So they can use this time to focusing on the domestic product. Next, perfection of skills in productions. So if any of the nations focusing to produce the particular line of the product, so it will get the perfection skills in their productions. Next, improvement in the techniques of productions. So if any of the techniques are there, these techniques also will be improved when they are focusing on any of the particular line of product. Next, increased productions. So the productions also will be increased for the purpose of exporting to the another nations. Next, higher standard of living in the trading countries. So one country is having the dealing with the other countries, these countries must be have the possibility to get all the type of the product produced by throughout the world. So when the consumers of the domestic countries are going to use this all type of commodities, their living standard of the peoples also will be increased. Next, equalization of prices between countries. The prices of goods are equalized between the countries. So when we are undertaking the international trade, the prices of goods will be equalized between all over the nations. The differences is only with regard to the cost of transportations. So except the transportation transport cost of transportations, the price will be the same among the different type of countries. Next, prices of factor of production are also equalized, because when we are involving in this international trade, all the nations can able to transferring their factor of production from one nation to another one of the nations, and the prices also will be the same. The prices for the factor of productions also will be the same. Next, equitable distribution to the scarce materials. The international trade may help the trading countries to have equitable distribution of scarce resource. Scarce resource means suppose if any of the raw materials are not available for any of the countries, so it can have the dealing with the trading countries. So the scarce materials also will be available among throughout the world. Next, general advantages of international trade. So what are the general advantages will be there in this international trade? Mean the availability of variety of goods for consumption. So when any of the nations come to the dealing with another nations, the variety of goods will be available for the consumptions. So throughout the world, so all the peoples can have the power and the possibility to using or consuming all type of productions. Next, generation of more employment opportunity. So when the international trade are going to increase, the employment opportunity also will be increases on the basis of increasing the international trade. So whenever the demand for that commodity in any of the trading countries is increased, so the factor of productions and the labor also will be, the amount of labor also will be increased. In this way, the employment opportunity will be increased. Next, industrialization of backward nations. The industrialization also will be increased or will be maintained in these even the backward nations, because some of the product is produced by the backward nations and it will be exported to the developed countries sometime. So when they are doing like so, the industrialization in these backward nations also will be increased. Next, the improvement in relationship among the countries. So when we have the relationship with the trading countries, the relationship among the both countries also will be increased. When they are being like so, there is no need to arise any of the war or quarrels among the nations. Next is the division of labor and specializations. When any of the nations are focusing to produce in particular line of product for the purpose of exporting to the another nations, the division of labor and the specializations also will be generated. Next, expansion in the transport facilities. The transport facilities also will be expanded among the countries. So the four types of the gains from the international trade are there. Okay students, then today we will study about the balance of payment and the balance of trade. So in this international trade, the subject of international trade, the two concepts are there, the two different concepts, the balance of trade and the balance of payment. So we must know about the two concepts. The balance of trade refers to the total value of countries' export and imports of commodities. So first, when we are studying about the balance of trade, so it will be refers to the total value of a country's export and commodities. One country must be exporting some amount of the commodity to the another nations. Like that, it will be import some amount of the commodities from any of the other nations. So the trade, the export and the import, the value of the export and import only is considered as a balance of trade. Every nations must be focusing to maintaining the balance of trade. If they are exporting 1 ton of commodities, it must be focusing to import the 1 ton only or below the 1 ton, or on the basis of the amount of money value. So only export and import of commodities are included in the statement of balance of trade of a country. The amount of export and the import of commodities. The movement of goods are also known as variable trade, except the services. The movements of good only is considered as the visible trade. So because the movement of commodities between countries can be seen by eyes and felt by hands and can be verified physically by custom authorities of a country. Some of the services and payments also will be available in this international trade, but except that payments and providing or transferring the services. So how the commodities are moving from one nation to another nation is considered as a balance of trade. So in this balance of trade, the two concepts are there: the favorable balance of trade and the unfavorable balance of trade. Every nations want to maintaining the favorable balance of trade. So first we must know about the meaning of favorable balance of trade. So when the total value of commodity exports of a country exceeds the total value of commodities imports of the country is considered as the favorable balance of trade. So one nations must be, suppose if the export for any of the commodity for one nation is higher than the import, is called favorable balance of trade. Simply, if you want to understand, the export must be higher than the import for the commodity in one of the nation is called favorable balance of trade. The export is greater than the import. The export must be higher than the import level. So when we are exporting the commodities, when we are more or higher level of export than their import, one nations must be getting the profit only. So when they are earning the profit from the trade, it's called as a favorable balance of trade. Next, unfavorable balance of trade. It is the opposite point for the favorable balance of trade. The value of commodity exports of country is less than the total value of commodity imports of the country is considered as a unfavorable balance of trade. So if the import is very higher, then the export is considered as a unfavorable balance of trade. So normally the individual peoples or the firms or the every nations also want to maintaining the favorable balance of trade only. If you are importing more commodities from other nations, we have to pay more money to the other nations. So we will never get the profit. So all the nations must be wants to maintaining the favorable balance of trade only. Next, the balance of payment. The balance of payment is a systematic record of a country's economic and financial transaction with the rest of the world over a period of time. The country's economic and financial transactions with the rest of the world. Financial transactions mean, as I told already, so when we are having the balance of trade, some of the financial transactions also will be available. So when we are importing any of the commodity from other nations, so we have to pay. So that financial transaction will be happening. So these financial transactions, when the financial transactions are going to continue, so it will be recorded. So the balance of payment is a systematic record of a country's economic and financial transaction with the rest of the world over a period of time. It must be considered as a 1 year. So when a payment is received from a foreign country, it is a credit transaction, while a payment to a foreign country is a debit transaction as our internal trade. If you are selling any of the commodities, we will receive the money. Like that, if you are exporting the commodities to the other nations, we will receive the foreign currencies. These foreign countries, so it is considered as a credit transaction. Like that, the payment to the foreign countries as a debit transactions. When we are importing any of the commodities, so we must be paying the foreign currencies. It is considered as the debit transaction. The principal items shown on the credit sides are exports of goods and services, transfer receipts in the form of goods, etc. The principal items on the debit side include imports of goods and services, transfer payments to foreigners, lending to foreign countries, investment by residents in foreign countries, and official purchase of reserve assets or gold from foreign countries and international agencies. So normally, what are the money transactions will be held in this internal trade? Like that, the balance of payment is also considered. So in this balance of payment, some of the components are there. The credit and debit items are shown vertically in the balance of payment account of a country. So they are divided into three categories. First one is current account. Next, capital account. Third one, official settlement accounts. In this current account includes all international trade transactions of goods and services. International service transactions. For example, tourism transportations and royalty fees. And international unilateral transfers, gift and foreign aid. Sometimes we will get the foreign aid and some of the gifts. One of the prime ministers also will be provide the gift to the another prime minister, or some of the individual people also will providing some of the gifts. And some of the foreign aid. Foreign aid means some of the trust also will be receivable from the funds from any of the other nations. This is also will be coming to the account of current. Next, the capital account. The financial transaction consisting of direct investment and purchases of interest. So bearing financial instruments, non-instrument bearing demand deposits and gold fall under the capital account. So what are the capitals are there? Or the financial transaction consisting of direct investment and purchase the interest bearing financial instrument is called capital account. Next is the official reserve assets account. The official reserve transaction consists of movement of international reserves by the governments and official agencies to accommodate imbalances arising from the current and capital account. So like a balance of trade, how we have classified the balance of trade as a favorable balance of trade and the unfavorable balance of trade. So the balance of payment also we can classify it as a two types, like a favorable balance of payment and unfavorable balance of payment. When receipts exceed payments, the balance of payment is said to be favorable. When the receipts is higher than the payment is called favorable balance of payment. So the receipts must be higher than the payment. So we have to receive more money from the another countries is considered as a favorable balance of payment. Next, unfavorable balance of payment. When receipts are less than payments, the balance of payment is said to be unfavorable or adverse balance of payment. So instead of receiving the money from the other countries, if you are continually paying to the import purpose, it is called unfavorable balance of payment. So when we are paying the foreign currencies to the foreigners as continuously, so the economy will be affected. It is considered as an unfavorable balance of trade. So the balance of payment disequilibriums are there. So normally all the nations must be want to maintaining the favorable balance of payment. Favorable balance of payment means the demand must be equal to the supply, or the receipts must be equal to the payments. If the receivings and the payments is equal, it is the equilibrium conditions of balance of payment. The disequilibrium balance of payment means the demand is not equal to the supply. If the demand is not equal to the supply, what will happen? So the receipts or the payments will be differ from one nation to another one of the nations. In this balance of payment disequilibrium also can be classified as three types. First one is cyclical disequilibrium, next secular disequilibrium, third one is structural disequilibrium. The cyclical disequilibrium arises because of two reasons. First, two countries may be passing through different phases of business cycle. So when they are facing the different type of the business cycles, that is, one country is maybe the boom level, another one of the countries or the trading countries maybe as in the depression field. So when any of the countries are being in the depression basis and the another trading countries being in the boom level, so the disequilibrium will be arises. The nations which being in the boom period, it will be has more export. Then one of the other nations which being in the depression basis, it will be import more commodity from other nations. So this disequilibrium will be arises. Secondly, the elasticities of demand may differ in two countries. Already we know, suppose for example, the demand for any of the commodities may be higher in one nation, and the demand for the commodities may be very low in another one of the countries. When they are being like that, the disequilibrium will be arises. The raincoat or the coat, the demand for that coat also may be very higher in the western countries, but the demand for the coat may be very less in the developing countries. Next is secular disequilibrium. The secular or the long run disequilibrium in balance of payment arises because of long run and deep seated change in the economy as it advances from one stage of growth to another. So when the nations are moving from one basis to another base, one basis to another base means it is not a basis of trade cycle. Suppose if any of the nations want to moving from the classical period to modern period, so it will be increasing the more commodities. Suppose if any of the nations will never want to adopt any of the changes, it will be import more commodities. In the initial stage of development, the domestic investment exceeds domestic savings and imports exceed and export. So as it happens in India since 1951. In 1951, so the initial stages of development was arranged. So in that time, the investment exceeds the domestic savings. So we must be made more investment without having the savings. So without having the savings, if you want to investment, we must be depending on the other countries or the other world financial organizations. So the disequilibrium will be there. Next is structural disequilibrium. The structural changes in the economy may also cause balance of payment disequilibrium. The structural changes include development of alternative sources of supply, development of better substitutes, exhaustion of productive resources, or changes in transport routes and costs. So the total structure of one nations are going to change. The disequilibrium may be arranged. So when any of the nations are going to make the more investment to change the full structural, so it will be in the need of more finance. So it must be depending on the other nations. So the three types of the balance of payment disequilibrium will be arises. So the balance of payment disequilibrium means the demand is not equal to the supply. When the demand is equal to the supply only, so the both balance of payment will be as a favorable for all the nations. When the demand is not equal to the supply, so the demanded countries have to more input. So the types of balance of payment of disequilibrium also classified as 3 types: cyclical, secular, and structural. Okay student, I think it's enough. If you have any doubt, please ask me. Thank you.